I think that the fiscal support that Congress has provided since the beginning has been really at the heart of the recovery and deserves much of the credit for the strength of the recovery over the course of the last year. I'm loath to comment on particular fiscal bills, as you know, but I would just say generally this situation really called for a strong fiscal response, and we've certainly had that. So the reason that unemployment doesn't go down further, given the level of growth, is really just that we see participation expanding on it's a different margin. It's people coming back into the labor market, and that actually holds the unemployment rate up. Is highly desirable outcome. But this was the biggest drop in participation since World War II. That's part of it. There are a bunch of other things that go into it. And of course, there's a good amount of uncertainty around that. And what's happened is that COVID has changed both demand and supply in some cases. And we're seeing with chips that go into cars now, we're seeing it there. We're seeing it at various places in the economy. The sense of it, though, really is that there'll be a little bit slower growth and maybe some modest upward pressure on prices of those goods. But that should be something that is temporary. A bottleneck by definition is temporary as the supply side adjusts.
And so I do believe we have more fiscal space, but it certainly doesn't mean that anything goes. I believe in responding to a crisis with a needed surge of spending that's temporary, that it was fully appropriate not to pay for it under the circumstances, but longer run, we do have to raise revenue to support permanent spending that we want to do.
What long-term issues could come to haunt us dealing with substantial long-term debt to the economy? In other words, it can't be a benefit for the economy except temporarily. What are some of the systemic things that could happen because of too much debt?
Well, if a country has too much debt, it may drive up interest rates. And in the process of doing that, it can crowd out other forms of productive investment in the economy, capital investment, housing, or other interest-sensitive sectors. And that may be a good thing or it may be a bad thing. It depends on what the expenditure is for.
It seems that rates have responded to news about vaccination and ultimately about growth. So higher growth, higher inflation, lower cases of COVID. So it's in effect, there's been an underlying sense of an improved economic outlook, and that has to be part of why rates would move back up from the extraordinarily low levels they were at, back up toward levels that we're more likely to see. And that has been an orderly process. I would be concerned if it were not an orderly process, or if conditions were to tighten to the point where they might threaten, our recovery. We don't expect that that upward pressure will produce substantially higher prices, or that the effects will be persistent. We expect that they'll be transitory or temporary. If it turns out that we do see substantially higher inflation, that would risk persistent inflation materially above our goal, then of course we would use our tools to bring inflation back down to 2%.
And from what you just said, then you anticipate there could be some upward pressure, but long term you don't see this as being an issue.
Long term, we think that the inflation dynamics that we've seen around the world for a quarter of a century are essentially intact. I meant that statement as a general statement, that the fiscal response overall has been remarkable, frankly.
Do you believe that the lowering of the corporate tax rate here in the United States didn't have a material impact on economic expansion in the United States?
I don't think it had a very substantial impact on investment spending in the United States. People are still studying that, but it does, I think it is necessary for U.S. firms to be competitive. President Biden has suggested raising the corporate tax rate back to 28%. We, at this point, collect only a tiny amount of revenue through the corporate tax, less than 1% of GDP. And I believe it is appropriate to raise the tax rate, but we need to worry about the competitiveness of American firms, and doing that in the context of a global agreement.
I've got one other question. So in your opinion, the increase of the corporate tax rate up to 28% will not cause any significant competitive disadvantage for the United States for corporate expansion?
Well, I think it would be important to make sure that it's done in the context of a global agreement.
I want to stay within my time, and I need to ask Secretary Yellen a question. Secretary Yellen, the Biden administration's plan, and it is your plan, to require the IMF to issue $1 trillion of these SDRs, new SDRs, is going to cost the American taxpayer about $180 billion. Now, your reason for doing that is a good reason. You say you want to help poor countries. But you and I both know that only about 10% of that money is going to go to poor countries. It's not going to help poor countries. It's going to help if they cash in their SDRs. It's going to help China. It's going to help Russia. It's going to help Venezuela. And besides that, under your plan, you're intentionally splitting the plan into two tranches of $500 billion each to avoid having to come before Congress. And I don't understand why it is efficient to charge the American taxpayer $180 billion, all of which we have to borrow, and you say you're doing it to help poor countries, and only 10% is going to poor countries, and even more is going to Russia and to China.
I'm sorry, it's not going to cost the taxpayer $180 billion.
Sure it is. You're going to have to borrow the money. You don't have the money sitting in a checking account.
IMF.
They're going to redeem those SDRs, not just the poor countries, but China.
There are many countries that can provide hard currencies in return for SDRs, including the United States. If the United States does agree to provide SDRs, it will have to issue Treasury bills or debt to do it, but it will also.
I rest my case.
I'm sorry, but it will also earn interest on any amounts that it converts on behalf of other countries, and it will be essentially a wash.
But the money will never be paid back.
And it will pay. It does. There is no money to be paid back.
Sure.
It doesn't matter. The interest that we earn on any excess SDR holdings offsets the cost of issuing treasuries, and it's essentially a wash. And it is not costly.
I disagree with you, Madam Secretary. I think I'm no disrespect, but I think you're wrong. I think we're going to have to borrow all $180 billion of this.
I don't know where you got a number like that from.
Well, when China comes to redeem its SDRs and says we want dollars, where do you think we're going to get the money? We're going to borrow it. I've gone over. I'm sorry, Mr. Chairman, but this is an important issue. I'll call you, Madam Secretary.
Okay, I'd be glad to talk about it offline.